Good morning, guys. It's yet another beautiful day where we're going to discuss another PD array. So, again, let me remind you this is a 10-minute, 15-minute video for all those who missed out on classes when I was teaching about PD arrays. So, these are more of practice essentials. So, I won't define what's a bullish or a bearish order block because today we're going to talk about order blocks, and thus this is also for those people who want to remind themselves, like a refresher of that sort, and also have to practice it and just run over through it. So as I said, today we're going to talk about order blocks, and here we are. So let's begin. In the name of the Father, the Son, and the Holy Spirit. Amen. So what's a bullish, what's a bearish order block? It depends on the trend, and thus that's why we have a bullish and a bearish order block. And this is a bearish order block, which is a red candle in an uptrend when the market pushed down or melted to a discount array level. This becomes an array level after the market pushes down, before the market takes out an old high, and then the market returns back into one of the last bearish candles that were there before the market rallies up again this old high, and that's opposite to this. So if you really do not know the definition, kindly go check out the videos where I've made it known of the definitions and try to explain even further about order blocks. But this is a bearish order block and it follows the same principles but vice versa from this. We're in a downtrend, we created a lower high level, took out an old low, and then came back into this green candle that serves as our order block to actually continue with the institutional order flow. So it's really important for you guys to know that. So let's jump into the markets. And for today, for those 8 or so minutes, I'll analyze from December. This is XAU That's gold on an hourly time frame. And let's just do December 2024, jumping into January 2025. So December may not have been the best, but we're practicing. I wouldn't advise anyone to trade on December, but we're just practicing and seeing how best December's price action would have helped us actually get to January and see those profitable trades. So this was the beginning of December right here. Actually began with this downtrend and then this choppy consolidation, and then what we have right here, a sell side liquidity grab before the market rallied up higher. So this is more of like an AMD pattern. Even though we're on an hourly time frame, I'm more of a day trader. I wouldn't wait for such setups. But after the market came above all these buy side liquidity, after grabbing all those sell stops around here, delivered them back up here, and then the market retraced and continued up higher. So you wouldn't want to trade here. Whoever wants to trade here, no worries, but I'm actually just trying to look at the trend and how we'd see order blocks. So let me first switch to a line graph, show you with an arrow. So off this small trend, you can actually see that the market came back up here, then here, did take out this low, came back up here, and then took out this low, came back up here, and then boom, took out this low, and then came back up here, and then took out this low, and then there was a market structure shift. So the market came down here, and then came back up here, and then did not give us maybe the best of retracement, but you do not know about the wicks. Once you get into the candlesticks, you'll actually see it better. What I want you to do is to like just give it a little cram around this space area before we jump into the candlesticks. So we had this push and then this minor push around here, which already grabbed all this buy side liquidity, so juicy. And then the market rallied higher again to grab all this buy side liquidities resting above this area, and then give us this very good retracement on like a New York session. That's Monday 9th of December 2024. gave us all this back into this area before the market continued rallying up higher. So now back into the candlesticks. Look at this. We created this low and then this high, which took out this high around here. Let me first zoom in more right there. So we took out this high after grabbing that massive liquidity. So this is Friday, and we're talking about a London session jumping into New York session. So we took out this high maybe in late New York, no, late London, no, the beginning of London session, sorry. So we took out this high, and look at this. We had the market structure shift going below this as our what? That's right, our bullish order block. So the market, if the market was on a really, really good trend, you can actually tell by old highs or old lows or even order blocks when the market has changed its character or we already have a strict uh, shift of structure. So we had this push. We expected the market to actually respect this as our bullish order block and then continue running higher. But the market did not do that. Market changed its character, going below this low, and now the market is interested in all this inefficiency that was left behind, which is a buy side in a BC. If you do not know what a BC is, kindly go and check out the video. I have explained everything about it. So once we had this, we had all this pull back up here. So as you can see, this is now our bearish order block. The market came into the 50% of the mean threshold of this order block. Now we're already on a downtrend, so this makes this our order block. You can see that the market tapped into that, and then the market came below this low. Then we continued rallying below it, and then we came back up high. So we still kind of respected this area or this order block around here before we continued rallying below. But already we'd already covered all these BC and also all these BPR. If you do not know what a BPR, kindly just text into the WhatsApp group, the Forex District Academy channel, or just watch the videos where I've explained all these terminologies or given examples and defined them properly. So I'm not here to define what's a BPR, and yes, these are terminologies in the Forex market where I feel you should know them. So we had all these retests before we continued pushing high. Now we changed character again before we rallied up, changing character, going above this bullish, no, sorry, bearish order block. You see that the market respected it once and then twice. The market was blocked to go above that before the market collected orders and jumped into a new day. This is Friday, this is Monday. So Monday we had all this sharp movement, and then the market came down, and then this is another PDRA, which we would not talk about today. On a later date, I'll show you guys. But if you really do not know it, kindly do more research about it. So we had all this, and then the market pushed into this candle after a market structure shift. So we're going from this back into discount. We're already at a very, very premium area above the previous daily high prices, and thus the market had to pull back upon that into what? Into this bullish order block, which is a red candle or a bearish candle. So you can already see that we did 50% of that, or the mean threshold of the candle. That's minus the wick. The wick is a rejection block, but yes, still very valid if you take the entire candle, but it's much more of where the bears took part and not where we had a minor BPR, like a very flush. Even if you're in a 1 hour, if you go to a lower time frame, there were some buyers who put back the market up here. So this is more where the bears took charge of everything. So that's our bullish order block before we continue rallied higher. And then Thursdays just came back into a breaker block. We already did a video on breaker blocks. So this was just a very easy one. The market came down around here just on this breaker block, and then the market rallied higher. This just covered 50, just covered let me say nothing, let me say, yeah, for this is a breaker block. You know, the market rallied up higher, covering all these liquidities, taking them, and then the market retraced back into this breaker block before the market continued high. So such things, before I actually even continue, such things where the market's not fully retracing. Because let me show you on this. If I use my Fibonacci, or let me just use a normal ruler, and the market actually didn't retrace that good. You know, it didn't get back into a discount. It means that there's so much inefficiency in the market, and we're just having buyers and buyers, and the market's rallying up with a very good bullish or even a bearish leg. These these are really risky to put your stop losses, you know, just below such levels. That's far. That's from my experience. So I know I shouldn't be teaching this in this video, but once the market is done from rallying up higher, it comes for these levels like really quick. I don't know if you guys have ever experienced that, but such levels, the market just, you know, like melts through them or rockets up above them. So yeah, once you see this such a trend, just look for a very good liquidity grab. And once you get your first change of character, if the market's going to come back into those levels, please don't look for buys and then put your stop loss in such areas which have really poor retracement or have really massive insufficiencies. So we had a really good bullish trend on this Monday, and then on a Tuesday, and then on a Wednesday, and then on a Thursday, it just grabbed, you know, like this liquidity, and then a market structure shift, and then the market melted on a Thursday and on a Friday. We had really good TGIF, and with just 2 days, Thursday and Friday, we were able to take out, you know, like three trading days. You know, like Monday, Tuesday, Wednesday was just taken out, you know, on 2 days. This day and this day, we just covered it all up before we actually even came for all these other lows down here. But the fact is, if the market doesn't have a really good retracement, the market's reaching up to something. You find that liquidity, you find that inefficiency, you could trade it better. You could understand what the market is doing. Sometimes it's sponsored or it just moves because of the news, the fundamental news, or some events that have just happened, and then the just market rallies in one direction or the other before we actually have that retracement. So we hit this order block right here. Sorry for that inside information, guys. We hit this order block right here after we had all these retracements. So this was like a midpoint of New York, and by the time we were done with the day, we hit this order block. We respected it. This is a bullish order block, and then we rallied up high. So from that point, I don't think we had really good rallies in the following day, which was on a Tuesday. We just continued rallying higher above previous daily high, and then we're just going up. And then we just had this very small retracement back into this breaker block, and then continued rallying higher. So Wednesday was interesting. We grabbed the previous day high, and then during just before we opened. What is called, you know, like the London session, we had this massive pullback. I don't know if it was news or not, but the market came back into this breaker. So sorry about this, guys. So we had this breaker around here, retested back again, which was also a previous day high of on a Monday to continue with the trend. So the trend is your friend. You already know that. So from a Monday, Tuesday, already expecting a Wednesday to continue higher, and then a Thursday or a Friday, kindly expect a pullback, but don't force the pullback. Sometimes you'll get a Monday to a Friday on the same trend, but most of the times, kindly expect Thursday on a Friday. Also depending on your very high time frame. So I'm on an hourly time frame, my daily time frame, my weekly time frame, my 4 hour time frame would tell me if on a Thursday or on a Friday we would have already achieved the weekly profile so as to get a pullback. So we had all this back into this breaker block as we speak before, as we talked before, and then we had all this rallying up. So from this level, interesting, this level, which is Wednesday previous daily low, to Thursday's previous daily high. Let me use a Fibonacci for that. This is interesting. So all this movement still supports the idea of a buy trend. But as I already told you guys, on a Thursday, and the markets already cleared some really good liquidity. Look at this. The market went above November's high. So that was on like December. We already, this is November's high. I can already annotate it somewhere there. And you can see we already achieved what we wanted to achieve. You know, Wednesday wasn't that good, it just poked it a little bit, and then Thursday cleared it all, and then we had a market structure shift. So from phase to phase is where we look at our 50%, and any order block below 50% is a good order block. Any order block, if we had an order block just slightly above 50%, it would not it will still fit the purpose, don't get me wrong, it's not every day, but a higher one of the higher probability order blocks confluences that you should actually look for is, does it fit to be in the discounted areas, or is it still in the premium areas? Such order blocks, most of the times, such order blocks which are up here are really stressful to handle. They actually serve as, for all those who bought, let me just put it this way. For all those who bought above November's high and they actually saw that, oh, Monday, Tuesday, Wednesday was a really good trend, and then they bought this off, they had their buy stop above November's high and they placed their stop loss below this candle, these guys were in a lot of trouble. These guys were in a lot of trouble because the market had not achieved its greatest, even though the market changed character, I understand that, but these are not the best order blocks if they have not gotten to its 50%, to its discounted prices. So once it gets to discounted prices, now we can look at every single other bullish or bearish order block. So if this is in bearish scenarios or in bullish scenarios. But we see in this case, the market had already fulfilled that, and we had this boom, the change of character. We slightly came back into this breaker block, retraced back up into what I'll talk about fair value gaps in the next video. But we had this candle right here, we had this candle right here, we had this candle right here. So all these three candles forms what? A bearish order block. So all these form the bearish order block. Plus, this is also another trading strategy which is known as the AMD. Kindly, if you already know what's an AMD, you already know what's an AMD, but this was a really good setup also for AMD. And thus the market pumped below into 50% real good, did not respect anything right here, while juicy liquidity is down here before the market tapped into all of them by the end by New York session, and then we had a very small distribution level before we kind of pushed back up a little bit and then rallied down. Now look at this, guys. from this, or maybe from this to down here, we did not have a really good retracement back. You can't compare this back into discounted prices. Again, I'll use my ruler. So from up here, which was Thursday's high, to, I don't know if this is Asian's low. Yeah, this was the beginning and also the lowest point in Asian session. We can see that the market came above this line. So this is like the midpoint between this and this, and the market got into this order block. But if I use the same thing, the same script around here, from this high to this low, the market did not get into a 50%. So it's going to be hard for me to trust this as anything close to an order block because it didn't achieve its maximum retracement level before continuing downwards. But the market just continued flowing to the downside. So when it comes in a later future date and I have a retracement back into this level, I'm not going to trust this to be my order book. Plus, there's already good inefficiencies. There are massive liquidity voids just above it. Anyone who will be trying to sell the market and place their stop loss here, it could possibly work. I'm not saying that it wouldn't work, but chances are they're going to be stopped out in the markets going kind of to respect this or even continue into an uptrend very, very fast. But this is dangerous placing your stop loss when you already see that the market did not fulfill more over 50%. And again, that's according to my experience. But we already see that we had a really good downtrend and we had this uptrend again on Monday. So this was on a Friday. The market did not achieve again a 50% discount from this high to this low. Just formed one candle into this order block, and some would say like, oh yeah, this was a really really good downtrend. I would have traded it, yes, on a very very lower time frame, not an hourly time frame, according to me. So from this high, now let me use a ruler, from this high to this low, where we had just one candle retracement, but not into a discount, did not even touch the breaker block. This is dangerous to actually trust this market, to stop around here, even though it did. But it's really, really dangerous, trust me, guys. And there's already some more inefficiencies about it. But as you can see, that the market was on a really good bear trend to hunt those liquidities down there. So from this high to this low, we already had a 50% pullback and hit the bearish order block, which is this green candle around here. It just touched into it, didn't have the best of the best retracement into its mean threshold or 50% of this candle, and then we continue downwards. Now, what happened on the next week? The next day, which was on a Monday, we had this retracement, and then the market wasn't maybe the best of the uptrends. And into Tuesday, we went below these levels. Now, for a continuing downtrend, this was really, really good because you already see that from this high to this low, we already had more than a 50% pullback into what? This bearish order block. Then we had this flow down. The market just formed a no, I'm not going to tell this. I'm going to tell it this in a later video, not to confuse you guys with something else. So the market had this pullback into this bearish order block, and then you can see that it got to a 50% of the length between these closing prices to these opening prices without considering the highs or the lows, and then it got to that 50%, and then boom, we had that meltdown. So after we had a push below an old low into a new day, so the new day got us to these levels, and then we went below these levels. So you can already see we had a pause around here, and then we had a very small retracement back up, and then bam. So did we get another pullback to continue with the trend, considering this is Wednesday? So on a Thursday, what do you expect? Like we already had this on a Monday, this on a Tuesday, and then this on a Wednesday. Not the best of the trends, but you can already see that we're already respecting old highs and taking out old lows. So this is a downtrend. You can even see it on a line graph. It's a downtrend. Boom, boom, taking old lows, and we are not going above old highs. So, but what do you expect in a Thursday on a Friday? You expect a pullback. You expect the pullback of the week after massive grab of liquidities. As long as your weekly profile has gotten you to the place where you feel that, yeah, now we can have a retracement, kindly Thursdays and Fridays do not expect to continue with the trend. Look for those TGIF setups. If you do not know what's a TGIF setup, kindly follow me for more. Follow this channel. I'm gonna tell you more about those types of setups. So we had this pullback from this high or from this high. No, I would pick this high. Why this high and not this high? Now let me explain. Let me break it down to you guys. Jumping back into a line graph. From this leg, from this high to this low, this high, this lower high, so this is a lower high, this is a lower low. Why is this a lower high? Because this was the highest prices that were experienced on that day before we took out the previous daily low, which were the lowest prices experienced in that same week. Because this is on a Tuesday, this was on a Monday. So these were the lowest prices experienced on the beginning of the week. And we also had our true weekly opening prices kind of somewhere around this area. So we pushed up on Monday, and then we paused, and then these were the highest prices experienced on a Tuesday before we created more lower prices of gold on that same week. So these are the highest prices on a Tuesday. These are the lowest prices experienced on the same Tuesday. We had this pullback into now a Wednesday, like a new trading day. And did it fulfill my 50%? Yes, it actually came back into a discount price. So I would trust this to be an order block. If I already see a bearish order block here, I would trust all these candles to be part of my order block. And thus, if the market would change character or had a market structure shift, I would expect this to hold my market. And if it goes above this, it's a change of character. To me, it's a market structure shift if the market would go above these prices. So, for instance, if we had the market come like around here, took out this low, just as it did, and then we had something like this, and then continued downwards, as long as the market has not gone above these prices, I know we'll have some turtle soup, we'll have some hunts, but if it goes above this price right there, I know that this will be a market structure shift to continue up higher. So I'm looking for areas which respected the premium and discount levels to actually know which is the most good area for me to look at my market structure shift, because people experience such like very simple things. And I'm sorry guys, I said this will be a 10-minute video. It's now close to a 30-minute video. People have something like this, and now they can't understand which high they are going to trust to have their order blocks, because these are short-term and intermediate highs, but we have that one high where if it hits that, that's already a change of character. But there are some lows or some highs which could be taken out, and the market still continues with the trend. The market actually still pushes lower. How does it help you to understand? Because this is not textbook thing that like you just have lower highs and lower lows, lower highs and lower lows, and markets changes structure by continuing with just one candle pushing above a certain high, and then we continue back to the upside. No, that's more of textbook. That's not real trading. Real trading, you have short-term and intermediate-term highs taken out, and you will still see that the market still going to continue the trend. I don't know if that is like really clear to you guys, but kindly, if it's not clear, just text me or comment into this video, and I think I'll try to break it down and try to show you guys more. So we had all this trend. Let me first show you something, guys. From this to this, let me zoom in. Line graph. From this high to this low, did this high get to 50% because the market actually went below this low? Did the market get to a 50%? This is a practical example of what I was just talking about like a minute ago. To be exact, look at that. The market went below this low, but did this high get to our 50%? Did it get back into the premium level before continuing below this low? It's a no. So even if I see a bearish order block, I'm gonna be like, no, these could be taken out. But did this high get into 50% of this? Yes, because you can already see that. Let me go back to the line graph. We can already see that now from this newer low, which went below, slightly below this low, according to prices, not according to the wicks, according to the price, this got to a 50%. This has achieved that area by taking out this short-term low. And yes, there is a fair value gap. And that's why I've told you guys, I would not have trusted this to continue with the order flow. This is a risk putting your stop loss around here. It's just so much of a huge risk. But was this a really good one? Yes. Now let's look into it. From this high to this low, did we do a 50%? Yes. We got, look at this. This low. Why am I not putting my uh like my line graph ruler around this area? Because it did not take out this low. Like these are just relative equals. That's why I'm not doing my measurements from this high to this low, because it did not take out this. If we would have taken this out and been a little lower, yes, I would have done it from that to that. But I'm gonna do it from this to this. So I'm not going to regard this, because this lower was still within this range. From this low to this high, this was still very much in range without taking out that high or taking out this low. So I'm gonna put my ruler to this low and not this low. This is just a relative equal low price levels. So we got to into a 50%, and it means that now I can trust whatever order block I see. I can trust whatever PD array I see. It might be a fair value gap, might be a propulsion block, a rejection block of this area if it did had wicks. I would trust this rejection block. I would trust this propulsion block or an order block to actually continue with order flow. And as you can see, the market had this retracement back into 50%, took out this low, and bam, we already had a good retracement into that. I can trust this, and if it goes above this level, oh dear, maybe I'm looking for a change of character. I might be wrong, don't get me wrong. I might be very much wrong about it, but most of the times you want to trust the PD arrays, which are in good premium levels when you're selling the market, or discount levels when you're trying to buy the market. Anything rather than that might be a trap, might be a very bad trap. Now, as you can see, from this high to this low, let's see if the market got to a 50%. It kind of touched into the 50%, but now let's look at it from this perspective. Now we already seen that this got into its 50%. Did this from this high to this low get into a 50%? Now, why am I not taking this low? No, because this high to this low would be calculating this. But now I want to see if this got to a 50% of the same. Like now, this is lower than this. So if I do my ruler, I want to do it from this high to this low and see if it got into my 50%. But it did not. But the market still rallied lower. Because you see, once you're looking at the market, candles forming, you don't know if these two bullish candles, if the next candle is still going to be a bullish candle. So when you're putting your ruler or your Fibonacci retracement, you're already seeing a pullback after taking out a previous daily low. You're already seeing a pullback. So you're just trying to wait. If you do tape reading, if you actually look at the market in real time, you'll actually see that this was a retracement, and you're going to wait for this get into like a 50%. But then you see another downtrend, and you'll be like, oh, it was just shy of this bearish order block, or did not fully come into this fair value gap, almost got to a CE, which is a consequent encroachment. But no, the market actually didn't even hit a consequent encroachment of this fair value gap. The market got rallied lower from that. And then once it took out this low, now everyone who had their stop losses just about this, and like they say that this is now their new bearish order block, these two up candles, and they took their sells from this level or from this level or even from this rejection block. They got stopped out. They got stopped out. There was an inefficiency which was in a premium level, and these order blocks were not in a premium level. So anyone who took their sells from here and had their stop loss here was taken out, and this market rallied even deeper now to fulfill the discount array, which was above 50%. The market first halted on this fair value gap, halted just a little bit, and then came into this bearish order block before the order flow continued. Now, would I trust this? Yes, because this is what wasn't the best of retracement back into discount, but these candles were. So I would trust this, sorry, to actually continue lower. And once we continued lower, we had that very sharp movement. So that's why I was telling you guys, it's not from this level. To me, it's from this level, because this is what fulfilled back into a premium. If the market here, back into line graph, if the market from this high or from this high, it's from this high, sorry, did not fulfill a premium back into, and it went already below this low, did not fulfill back a premium, I wouldn't trust this. It's just hard for me to trust this level. Even with its wicks, it did not get to 50%. from this high to that low. Even though here we can see that the market did not take it out, it just created a relative equal lows. I would still not use this as an order block. I still feel that the market could push a little higher and then continue with the downside, or just continue to the upside. So the market went lower from this high to this low. Remember, I'm not using this. So it's from this high to this low. Did the market get to a 50% to actually continue with the trend? And then this was a Thursday. We already said that we have a retracement of the weekly profile on a Thursday or on a Friday. And we had both days. The Thursday was a really, the market opened and these prices, the market pushed down, but the market still almost came back to the opening prices with the same day. It was buy and sell day. Buy half of the day, sell the other half of the day. And then we had a really good TGIF. If you had your market structure shift from this level, you'd have seen all this price action be good before the market taking out this Thursday's high. Now, jumping into the other week, I want to show you guys the irony of trading. As much as I told you guys that I would not have used this as an order block, this is still a breaker block. So you have to find a PD array, like one array to another, for you to have better confluences. I would not use this as an order block, but I would use this as a breaker block. On a higher time frame, I would not see this order block. I can only see this on an hourly time frame, and yet it did not even get to a 50%. So on an hourly time frame, I got question marks. But on a higher time frame, like on a 4-hour time frame, I already see this high and this low, and I already know that this is a really good breaker block that the market would respect and still push lower. So as much I would not use this as an order block, I would use this level as a breaker block. And remember, we said that this got into a 50% on a higher time frame, and the market is very fractal. It means that the market repeats itself time and time again. On a higher time frame, this is just a bullish candle from this low to this high. There are more bullish candles than bearish candles. So that is like one or maybe two, three bullish candles, which would be fit to still be an order block. But I would not trust this on an hourly time frame because it did not fulfill its 50% back into premium before rallying lower. But you can see that the market respected this, the market pushed down, and then the market changed character. So what's the point of changing character? The point of changing character would be that one order block or that high or that low that you knew if the market would take that, we already have a change of character. So yes, today I was giving you the practice essentials of an order block, but also will help you to know when we already have a change of character, when we do not have a change of character, when we're just having a turtle soup or a Judas, and then still continue with the order flow. So back to this, we already see that this was a really good downtrend because from all this uptrend the market got into this breaker block, and even if I would not have trusted this already, I would have seen a market structure shift and the market got below these prices right here. So this was like on a Thursday, so this was on a Friday, this was on Monday, Tuesday, and then Thursday. I don't know where Wednesday is. Oh, Wednesday was Christmas, sorry about that. So this was 24th and this was 26th. And then we had this, the market failed to go above this high, and then the market rallied below this. So would I count this? It's still part of this leg from this low to this high because the market did not go below this. So bam, bam, look at that, fulfilled, fulfilled, really, really good. So from this high to this low, we already have a 50%, we already have a bearish order block for order flow. And then the market took out this low, had this very, very good retracement into this, and then rallied lower. So I would also trust this, that if the market goes above this price, we already have a market structure shift, and then the market pulled lower, and then the market came back up, respected this area, but did not take out this low. What happened next? We had a market structure shift on an hourly time frame, and that was on the 31st of December. We didn't have the best of pullbacks, but we went above this. So we went above this high, we went above this high, and remember, all these highs got into a discount, no, into a premium area. So from this high to this low, back into premium, had a really good run. From this high to this low, had a really good premium to this. So this and this are really good areas where I'd have my order block for a continued downtrend. But the market went above those prices, and thus we had a market structure shift. So remember, guys, I already told you I don't trust such things. Like from this high, this low to this high, we did not have a 50% now for an uptrend. Now leave this downtrend. Now we're already in an uptrend because we've already taken out this high. So I would not trust this movement. Market did not get to a breaker block. The market did not get to a 50%, but the market just continued rallying up higher into January. Now this is 31st of December. This is January 2nd. The market just continued rallying up high. Once the market hits a certain level, the market comes for these lows really, really good. The areas where the market did not achieve its greatest retracement but still would form a small anchor point. Most people think that those are the supply and demand areas, like the market's not going to go below these prices. No, the market's going to come for those prices really, really quick, really, really strong. And you can see that the market gave a little pause. The market kind of gave the feeling of a market structure shift before the market took out all these. Anyone who had bought the market and had their stop losses on these swing lows got into really, really good trouble, but the market still rallied up higher. Now you can already see the 50%. You can already see that the market coming into discount. Now knowing that the market was already on an uptrend, now not on a downtrend, you can already see that the market got those 50% really, really good to continue the trend. Now this was a really, really good time to make money from this Monday, Tuesday, Wednesday, Thursday, and Friday, before the market got to whatever point the market wanted to get to and actually have its retracement. So until next time, this has been a very, very long, almost 50-minute video, but you guys be blessed and stay blessed. Kindly practice those things, have those levels. They're not the same in every single pair, they're not the same in every single currency. So kindly practice them, and until next time, again, be blessed and stay blessed.